PayPal stock is a roller coaster at the moment, down another 4% this week, but with earnings coming within the next few days, this could prove to be an inflection point for PayPal. This is a must-watch video for PayPal investors, and I will look at how PayPal is being manipulated while retail is getting scared. Major institutions are buying up the stock on the cheap. Before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel so much. I'm aiming to get 400 likes on this video. Help me hit that goal. Subscribe to the channel and hit the bell notification if you're new so you don't miss out on any new content. I'm not a financial advisor. This is not financial advice, so always do your own due diligence. Now let's get straight into it. First of all, what exactly is PayPal? Well, PayPal is a fintech company operating in online business payment system in the majority of countries around the world. Their online payment system enables individuals and businesses to send and receive money securely either by phone, app, or website. When linked with a bank account, debit card, or credit card, PayPal serves as the middleman to keep the bank data secure. PayPal has over 300 million users globally with 29 million merchant accounts and has been established for decades. So let's be honest, everybody has heard of PayPal and everybody knows what PayPal is. This is a household name for the better part of the past 2 decades as one of the most established online payment processors in the world. But over the years, PayPal's business model has become stale and the company had lost its position as the most dominant online payment provider. But in the past year, the company has acted, with new CEO installed who has taken action to build a new world-class management team that are looking to turn this company around and re-establish themselves as a market leader. PayPal are focused on driving profitable growth and maintaining a strong balance sheet and return excess cash. And we can see that here. In the past 2 quarters, the company has increased revenue by 9%. While also increasing operating margins by more than 22% year over year. And this has led to an earnings of $148 for Q4 2023, which is a huge increase of 28% over Q2 2023. So in just 2 quarters. Now this is far more impressive than a lot of people will give the company credit for. It's one thing for a company to increase revenue by 20%. This can be done in many ways, and it doesn't necessarily mean that the company will become any more profitable. In fact, for a lot of companies, increasing their revenue comes at a substantial cost and actually the margins deteriorate. But PayPal is improving their margins. They're increasing their earnings per share, which is a sure sign that management are going in the right direction. And this is the reason why PYPL stock has increased about 30% in the past 6 months. Now, I don't want to focus solely on the investor's presentation, so the last thing I will look at here in this is the full 2024 guidance. So PayPal have guided on the low end for 2024. Now, this is a similar tactic to the ones we've seen with companies like SoFi recently. They estimate low and then they beat the estimates every quarter. PayPal have guided for just 7% revenue growth and single-digit EPS growth. To put this into perspective, this would be lower than any recent quarter and would actually be very disappointing. So I expect this to be beat quite easily when they release earnings on April 30th. But more importantly, look here at this. During 2024, PayPal will be doing a share repurchase program of at least $5 billion. This alone will be a huge catalyst for PayPal stock. Now, everyone knows that PayPal stock has been beat down over the past couple of years, from over $300 in 2021 down to just $50 in October 2023. Analysts had been bearish for a long time. On Friday, Deutsche Bank said that PayPal stock's risk-reward finally looks favorable, setting a price target of $74. They stated that under the new leadership of CEO Alex Chriss, they believe the company is correctly focused to reverse share loss. As a result, the setup for PayPal is more positive than it has been in a long time, given that 2024 expectations have been reset and the new CEO's agenda begins to take form in full year 24. And it's a similar story for Woodward Partners, who have also issued an investor's letter this week confirming that after taking gains around the company peak in 2021, we have been adding to the stock slowly over the past 2 years, taking it back to a significant position in the portfolio. So think about this. The companies that were selling the stock when it was at its high in 2021, they have been getting back into this stock over the past year. So, PayPal, 3 reasons why I'm loading the truck today. So PayPal's fourth quarter earnings sheet exceeded expectations. PayPal's total payment volume was up 15%, while customers continued to use PayPal's products more often. The fintech saw a boost to its operating income margins in Q4 2023, and PayPal's guidance for full year 2024 implies a 100% free cash flow return ratio. But I do want to point out just a few important points. When the stock tanked after the earnings report, a lot of people seem to forget that PayPal actually beat estimates for both revenue and earnings per share. It was other factors that were seen negatively. On customer acquisitions, PayPal lost accounts throughout 2023, and this was seen very negatively, and the company continued to lose customers in Q4. PayPal's account base declined 2.5 million customers in Q4 and ended 2023 with 426 million customers. Now, according to PayPal, these account losses related largely to unengaged customers, but this was the 4th consecutive quarter of account losses. However, there seems to be vital information that gets overlooked. PayPal's active customers are transacting more than ever, leading to growth in total payment volume. Transactions per active account increased 14% year over year, implying that users that do use the company's payment services are more engaged than ever. Solid free cash flow generation. PayPal is doing very well for itself in terms of free cash flow. On average, PayPal generated $1.1 billion in free cash flow every quarter in 2023, which is very impressive. And now the next bit here is very important. The sell-off after earnings was mainly related to PayPal's guidance. It seems investors are overreacting. PayPal's full-year earnings guidance implies no growth year over year. While the outlook was disappointing from an earnings growth perspective, PayPal continues to expect a solid $5 billion in free cash flow and a return of 100% of this FCF to shareholders this year. Now, while this outlook was disappointing from an earnings, the repurchase volume of $5 billion implies the fintech could buy back approximately 8% of outstanding shares this year. Now, the size of PayPal is something that I said earlier is being underestimated. Given that PayPal has 426 million active accounts and is expecting $5 billion in free cash flow this year, I believe that PayPal's price-earnings ratio of 10x seems inadequate. For example, SoFi, ticker symbol SOFI, which I've made a few videos about recently, so check these out if you want. There's links in the description below. SoFi is valued at over 23 times forward earnings. Now, both SoFi and Block have stronger EPS growth prospects in the short term, as they do better on the customer acquisition front and their core products have momentum. PayPal, however, is attractive from a value point of view. Fair value PE ratio for PYPL stock could see the stock trade at least 15x forward earnings, given its potential for operating income margin expansion and high recurring FCF. The implied fair value based off full year 2025 earnings is $90, which implies approximately 58% revaluation potential from the current price. PayPal earnings report is due on April 30th. If you want to see an earnings preview video where I discuss what will happen, then drop a comment below. In my last PayPal earnings video in February, I called out an options play that made viewers over 80% return in just one day. These are high-risk plays, but if this is something that you would like to see, then like, subscribe, and comment. And if you're still watching right now, then congratulations. I will also be doing a giveaway on the channel in the coming weeks, so make sure to comment. More details on this later. If you enjoyed this video, follow me on Twitter. All links are